Price action is the language of the market because every single chart that you've ever looked at in your entire life is trying to tell you something. It's trying to tell you exactly what it wants to do next. And for the traders out there who can successfully interpret that language, they're going to win and win big. For those who don't, it's game over. It's just a matter of when. And if your experience up to this point with trading has been filled with nothing but frustration, inconsistency, and broken confidence, there is a good chance that you are not reading that market language correctly. But that's okay, because we can fix it. But in order for us to do this correctly, we have to start with this. If you are relying on those standard price action formulas like chart patterns, candlesticks, support, resistance, or other types of chart voodoo, you are missing the big picture. Because the big picture here is emotion. You see, somewhere on that chart you're looking at, there will be a moment where an emotional buyer meets a technical seller, or an emotional seller meets a technical buyer. And if you don't know where this is, or you don't know what this is, well, we've got some work to do. By the way, my name is Doug, and I've been day trading now for more than 25 years. This is my life's work. And being able to successfully interpret the market language has helped me have consistent day trade gains that look like this, and consistent day trading months that look like this. And in today's video, I am going to give you an absolute masterclass on price action. I'm going to teach it to you in a way that you will never forget, and it will immediately help you level up your trading results. And as always, everything I say and do in this video, I will back it up with a series of live trades so you know it works. Anyway, let's get started. All right, my friends, let's start with this. What did I mean when I said an emotional buyer meets a technical seller, or an emotional seller meets a technical buyer? Like, what the hell am I talking about? For every chart you're looking at, like every single day of the week, there will be a moment in time where two worlds collide. The world of emotional traders and the world of technical traders. And the byproduct of this collision is this spot will create the greatest trades imaginable. Now, not the only trades imaginable, but the very best of the best. At least for the technical traders. It's an absolute nightmare for the emotional ones. Now, many times these moves take place via market manipulation, like algorithmic programs or liquidity sweeps, or sometimes they're just a natural product of the trading universe. Nonetheless, this is where we want to try and position ourselves every single day of the week, because this is like Trader's Paradise Island. It's where all the glory and all the riches are, and we need to do our best to catch these moves. And in order to do that, I've broke today's video down into three main components. First, we're going to talk about the what. What is that specific signal that you're looking for every single day to tell you this event is going to happen? Number two, the where. Where on your charts could you predict that this move will in fact take place? And number three, the how. Once you've seen that, how will you trade that to make the most amount of money? So let's start with the what. And the what, my friends, is candlesticks. If you want to master the art of price action, one must master the candlesticks. But not all candlesticks are created equal. In fact, out of the entire candlestick universe listed here on the screen, there are really only 4 that represent the highest level of emotional significance. And those are the ones we need to learn. And they are the hammer and inverted hammer candles and the bullish and bearish engulfing candles. So let's go through each one, starting with the hammer and inverted hammer, because these are my favorite. And those who watch this channel know I love to call these candles John Wicks. So from here on out, when I say John Wick, this is what I'm talking about. It's just something I like to do. But it doesn't matter what we call it, right? It matters how we interpret that language of the market. So why is this so important, and what do we need to know about this candle? Well, you see, at one point, that candle that you see was a full-bodied red, which meant it was sell-side dominant candle. And before it could finish its time period being the chart frame you're looking at, 1 minute, 5 minute, 1 hour, daily, it doesn't make a difference. But before it could finish that time period, there was an immediate and abrupt change in its sentiment, causing it to become buy-side dominant. Now let's just think about that for a second. At one moment, it seemed to be lopsided sell-side dominant, but almost in a matter of either minutes or seconds, it immediately shifts completely the other direction and becomes extremely buy-side dominant. Keep that phrase right there in your head. We're going to come back to that in just a second. Now, the inverted hammer is the backwards relationship to that. At one time, that candle was a full-bodied green representing buy-side dominance. And before it could finish its time period, which seemed very quick, rapid, and immediate, it shifted to the other side and became sell-side dominant. But that's the easy stuff. What we need to do now is get our shovels out. Let's dig a little bit deeper and talk about this hammer candle. When it was at max red, the emotional significance to that was fear. And that fear could have been generated from buy-side traders who are underwater on a position. They could have chased a rally, and that was the very next candle that they bought into. If you've traded for any length of time, you've probably been on the other side. You know what that fear response is like. And what happens in that fear response is the first thing to do is to bail on the trade and ask questions later. And when a bunch of emotional traders do that at one time, at one spot on the chart, it actually creates more fuel for the fire because those sell orders hit the markets or that you're trading in rapid succession. So you're getting all of the sell side volume at one time, and it's creating panic and fear. But if that candle wicks back up and retraces a majority of that fear, that tells you the one thing that you were looking for that I mentioned early in this video in the introduction. That signifies the precise moment that emotional sellers collided with technical buyers. And when that event happens, you're onto something special. Let's move over to the other candle real quick and talk about what that would look like. The inverse relationship, of course. That candle represents a different emotion. It represents greed, right? Emotional traders were chasing into price. They had FOMO or many other types of emotions, and they were just chasing. Remember, emotions are the abandonment of intellect. It's just buy, hit the button, ask questions later. And when that candle starts to drop, it creates the opposite reaction. They feel, I have made a mistake. I got caught with my hand in the cookie jar. I need to sell because I'm instantly watching my P&L deteriorate in front of me. It becomes a panic event. And if that candle retraces, what that means is the technical sellers took advantage of those emotional buyers, right? That's where the emotional buyers ran into the technical sellers, was that spot on the chart. Now, when we look at bullish and bearish engulfing candles, they mean the exact same thing. They just have a different look to them. So for this one, the size of that candle, the size of that red candle still represents fear. In this case, the other candle that completely engulfs it has that same representation. It goes from completely sell side dominant to buy side dominant. When you look at the other side of that candle, if it's a large, full-bodied, strong green, what does that really large green candle represent? It represents greed. And if the next candle after that is a complete abrupt change in sentiment, then you've achieved the same emotional response. So let's take a look at some charts. Starting with this bad boy right here on the screen. And I'm going to test you for a second, make sure you're paying attention. What do you think this candle is right here? I mean, obviously this should be pretty easy. It is a buy side dominant bar, which means what? Potential greed situation. Now I'm saying potential because what I'm going to say now is something I need you to rewind about 150 times. Very, very important you get this part correct. You have to see either the John Wick candle appear after this or the engulfing candle to appear after it. Because it ain't like this thing can't keep going or won't keep going. They do, and they do a lot, and we want to buy those in certain situations. And we can't just assume that every single robust, strong green candle is a bunch of idiots acting on fear, because they do in fact go higher. And if you prematurely jump into them too soon and sell them, you're going to get steamrolled. Very, very important that we get the signal. But what it does is, I've often referred to this also as a lead candle. It raises our awareness that that situation we're looking for, where the emotional buyer bumps heads against the technical sellers, is about to emerge, and we want to heighten up our senses, take a look, and make sure that candle appears, and when it does, we need to react. So I'm going to kind of move this forward real quick, and you'll see that the very next candle, in fact, does that, right? You have your classic John Wick candle. Now, there was a little bit of a wick on the bottom of it. Don't worry too much about those. When we're drawing technical patterns or you're looking at technical candlesticks, this is one of the issues with them. Not 100% of the time do they match perfectly the drawing. The most important thing that we need to understand, and why I call it the John Wick, it's all about the wick. If the wick has that retracement, right, where it is strong, where a significant amount has abruptly shifted, that's all I need. And you'll see that is exactly what happened. At one time, there were emotional buyers right there. They butted heads against technical sellers, and down came the candle. Now, if I kind of fast forward this a little bit, you're going to see what happened after that is this thing continued to move lower, okay? And it was followed up by a couple more aggressive candles. So let's move on to another one, and it should be a slam dunk at this point. Tell me what we've got here. Tell me what we got here, guys. Definitely emotional buying, right? But we still need to make sure we see the John Wick of the Power Tower. But this is why I call it the lead candle. It's raising our awareness to it. And I'll tell you what, hopefully some of you see this. Let's take our eyes, kind of move them over to the left. Tell me where you think this thing started from, this rally started from. Well, what do you know? Take a look at that bad boy, huh? You see what happened? That wick led to a rally. Now, if I could kind of play this forward real quick, what do we get on the very next candle is we get a complete blowout, right? Actually, a couple of them right there in a row, but let's just focus on this one. What happened? As soon as you pulled back, that should have been the signal that the next potential candle, doesn't matter what time frame we're trading, that next potential candle has the ability to do that. And again, right there, that's 100%. Without question, emotional buyers meeting technical sellers. This wick at the bottom was reversed. This is emotional sellers meeting technical buyers, but there is your wipeout candle. Now that's cool and all. You can go a long, long way in your trading career on just those candles, but there's something else. So let's get them shovels out. Let's keep on digging, because to take this to another level, we got to look at levels themselves. Where this happens on your chart is far more important than the candle itself. And I'll show you what I'm talking about. And the tactic I've been using to find the most premium levels on a chart is the box theory. Now, I've been preaching the gospel on this channel for a long time about the box theory. I've got a bunch of videos that really dive in deep to this topic. I just want to keep it basic for this video. So I'm going to put those videos up here on the screen if you want to watch those after it's done. Now, here's why I like it, and here's why it's so easy. So what I do every day, still 20 years later, is I go to the previous day's high and connect it with the previous day's low. So this highlighted black area is the previous day's high. And I'm going to go to the highest wick or candle or point I can see or print. And I'm going to connect that with the lowest print I can see, which is down here. And I'm going to extend that all the way out to the right side. And the philosophy that I have here to keep it very simple, why I love it so much, why I keep doing videos about it, it's this. As the asset or whatever asset I'm trading, as the prices move towards the top of the box, I want to be sell side oriented. That be sell side thinking of making a short trade or selling a long position I have. When prices get towards the bottom of the box, I'm thinking buying that dip, longing it or covering a short position that I have. And then what I do is I'll take myself a line and I'll draw it through the dead center. And there's a saying I've been using for a long time that's in every one of those videos. Do not diddle in the middle. So I want to try to stay out of executing in the middle because that's where all the noise is. Now, one thing I want to make clear, because I always get this question, the box theory's main goal is to get you through the first 15 to 20 minutes of the day. And a lot of days there's going to be new structure on the charts you're trading, and we have to draw new boxes. That's another topic. But it's to get you through those first period of the day to get you on the right side. But let me show you why this is so valuable and what we're going to do with this. Now let's open up this chart so we can take a better look at it and try to connect these two dots together, starting with the big green candle. By now you should know this is a greed candle, a buy-side dominant candle. Now at this point, it's sort of a lead candle for us in our mind because we're looking to see, it's raising our awareness, and we're looking to see if somewhere a John Wick or Power Tower candle will emerge. And as I said, you can't just jump into these too early. You might get steamrolled. But here's the edge. The edge is, look where the price is. It's starting to protrude the top of the box. And this is the area somewhere up here where there would be a high probability that candle would appear. So see, what you're doing is you're actually getting yourself so focused and ready, it's going to be impossible to miss. So as I kind of move this forward to the next candle, you're going to see that's exactly what you get. You do get the John Wick candle. Actually, it's partially engulfing, but you do get that John Wick candle. You do get the selling, but look where it took place. Now, what makes this a high probability of a reversal is not only is the candle strong, but the level is strong as well. And you can see exactly what happened after this is it moved much, much lower. Now, here's something I want to show everybody here to give you an idea of how important these premium levels are and why we need to pay attention to them. Because I'm sure some of you see this right here. There's a John Wick candle here. There's an engulfing candle here. There's a John Wick here, and there's an engulfing candle. But look where the activity is taking place. It's taking place in the center of the chart. And one thing I want to make clear, it's not like you can't make any money in the center of the chart. It's like not like a no forever. But the thing is, the degree of difficulty, the difficulty of accuracy in this level is very, very hard, especially for the new trader. The traders that can make money in the middle of that, even though the John Wick and Power Tower signals were accurate, it takes a lot of effort and it's a high degree of difficulty. Do yourself a favor. You don't want the stressful trades. So I just kind of zoomed out so we can get the whole entire chart in the screen. And let me just show you the point right here. Take a look at this rally right here. If you trace the origin of this rally, it goes all the way back to this point. Where did that point take place? At the very bottom of that box. And you've got your John Wick, you've got your Power Tower or engulfing right here, and that led to a huge rally. And take a look. If I draw this out, you can see, what do you got here? I mean, that's clear as day that at this spot, you have yourself a tower. But look what happened. If I kind of just move the box out here, this thing came in where? At the top of the box. So again, it's not like you couldn't make money on this or you couldn't have made money on that. I get it. But if you hammer this right, you got the biggest move of the day, then you bought the biggest move of the day. You don't need to mess with the other stuff, right? That's the importance. It's getting the very best quality out of the trade. Now let's move on to step number 3, which is the how. How are we going to execute this once we see the signal? And the entry model I'm using is super easy, so we'll probably only be here for about 30 seconds, really. It's simple. There's an aggressive way and a not so aggressive way, and I'll show both of them to you. So here's what I would do in this situation, staying with the same chart for an example. When this thing has retraced, the aggressive entry for me is once that candle has retraced about 30 to 50% of the previous candle. That's what I consider engulfing, 30 to 50%, especially on a large one like this. So 30 to 50%, I would enter, and you'll see there is a wick underneath of that. So as soon as I saw that, that would be enough for me. So my entry would be right there, and my stop would be up right above the high of the day. Now, a lot of people ask me, because I've done videos about this before, do you wait for candle closures? No, not always. Okay. And one of the reasons for that is, well, there's a couple of reasons. One, I've traded a lot of these. I have a lot of reps and I have a general understanding of how things work. But a better answer for this as well is I trade a lot of bigger board instruments like the NASDAQ futures. I trade things like Tesla, Google, Netflix, and Amazon. The difference of getting in a little bit earlier saves you a ton of money on risk. Now, the question a lot of traders would have is, yeah, but if you get in early, you don't have a signal, your accuracy is going to go down. No, it won't. Not when you have the level and the candle. So this is the way that I would enter this. And if we just kind of move it forward a little bit, that's the trade. If you want to wait for a candle closure, here it is. Whenever this candle gets taken out, the base of the red candle. So whenever that closed like it did there, the entry would be right at the break of that candle. You could wait till the bottom of the wick, but for me, I would go right into the bottom of that candle with the stop at the same place, right? And that's also the reason the stop remains the same no matter where you are. So if I kind of move it forward, I'll show you the entries here real quick to make it easy for everybody. All right. There would have been the other entry. The other entry would have taken place somewhere around here on this candle, right? And the stop would have been in the same place. Now, this candle also was the engulfing candle. Sometimes they are separated by a smaller wick, but that is 50% of the big candle. So either there or there would have been the secondary entry. I would not have entered here. It's too late because your risk here is too high. Like the stop, no matter where you enter the short, stop's got to be at the high of day. So whether you enter there, or there, stop's got to be up there, right? Makes sense? I wanted to review a recent trade here made in Tesla. This is the kind of trade you need to learn about. And this is what it means to be a trader and what it means to stick to your trading plan. Because first of all, it involves a loser. And one of the things I really struggled with when I started trading is if I took a loser, I just naturally felt stupid. And we feel bad, right? We don't like losing. But here's the struggle is If we take a trade and we lose, it doesn't mean it's a bad trade. It just could mean our timing is off. If it's done right, it just means our timing isn't lining up with the idea. But if we immediately see the setup take place again, even if we just lost, we got to go right back into the market. Man, that is hard to do sometimes, is to go in again. But let me show you what we're talking about. And I'll put the screenshots up here so you know what the outcome was of Tesla. Let's walk through it from the top. So as always, I start with the box. I go to the previous day's high, which is, I include pre-market, by the way. You can watch the box video if you want to know more about that. I connect it to the low, and I extend it all the way out. Now, what we'll do here is kind of open up the chart and get a better view of where Tesla is trading at. And of course, we can see that Tesla is trading towards the top of the box, which we should be sell side focused. And my first entry was on this John Wick candle. Now, another reason I wanted to bring this up is because a lot of you are probably saying, well, what about that John Wick candle? How come you didn't enter on that one? What about that one? Or what about the engulfing right there? And here's the answer. In a real-time environment, in the heat of the moment, even though you see that print on the screen in real time, it wasn't even staying there for not even a second. It would just kind of hit that and snap, hit that and snap, hit that and snap. So it never really gave you the impression or feeling that it wanted to roll over. But once we had gotten the three tops here in terms of wicks, 1, 2, and 3, and I had defined risk, I felt this was the right spot to initiate that short. This is where the risk would be low and the reward could be high. So I went ahead and shorted about in that spot. Stop was right above the top of that box. And my intention was to get back down into here where the original opening range breakout started, because my thought in the morning in the pre-market is I wanted to buy it, but I totally missed it. Remember, we have to kind of adapt as traders. So I thought, well, if it pulls back here, I'll take the short, then I'll flip that and try to go long. Well, what happens after this is it starts to pull back, but you don't get very much in terms of the pullback. Now, I wanted to show you guys this for a specific reason. So I decided at this point to cover the short far before its target. And here's why. Not only are these candles valuable to you in terms of entries, but they're great for exits. I wanted more. I wanted to get down lower, but take a look at what we had. We had the power, a tower, and that was a signal for me to say, you know, not only that, it took a long time to get down there. It was a little bit stubborn. And then you get the power, a tower. It was time to cover it up. Now, the next question would be, well, did you buy because you wanted to buy? Did you buy that? And the answer is no. I actually missed it because once I had gotten out of that trade, it had already moved a little bit, which was a shame because it moved a lot higher from here. So let's take a look at this one. Now, this is one of my favorite short setups, is the flag that gets extended. So after having a trade that, let's say, I wasn't overly excited about, but it wasn't a loser, I felt, okay, this is a much better area. Let's open this up so we can get a really good viewpoint of this chart. And I want to kind of move it down there so everyone can see, and I'll try to expand it. So there was again another engulfing candle. So I enter yet again on this trade. And this time the risk is even lighter. It's really, really close. I got involved in it. And then this is what happened on this portion of the trade, is I get stopped out and this thing takes off, okay? This is what happens sometimes. So I've got one trade that's and now I'm kind of scratch on this thing. And the short idea at this point doesn't seem like a good idea at all, does it? I got like two trades, one winner, one loser, a scratch, and I'm like, I should just walk out for the day. But then here comes the signal again. So let's open this up so we can take a better look at it and walk through it. Now, the next short came right here. The third short came in on this power tower. So back to the question you may ask, well, why not that one? Because it was a power tower. Same situation here. It just didn't stop long enough. So one of the things that you benefit from is screen time. So when you have the signal there, the context was what we needed to pay attention to. And that context on let's say the cloud over top of this one was Tesla was getting destroyed by the market. And we have this great tariff news and everything's just blowing up. So ranges are getting expanded and we have to take that into consideration. But this bar didn't even stick long enough for me to really process that short. But I did it here. I went again right here at that spot and I put in another short. So now that's 3 times, right? And this one right here is not just a short randomly. So one of the things people will ask is, well, once you break out of that box, what happens? If I kind of move this down, you'll see that this thing ran into the resistance from the day before. So when you break those boxes and ranges, you move to the next portions and look at any sort of pivots or any sort of resistance. So once this had started to march upwards here in this formation, I was already looking over here for maybe a third shot, and that's what it is. So it did line up with a resistance area. And on this one here, let me kind of move this chart so everyone can see it. This one played out exactly like I wanted the very first one to play out or looked for in the first place, okay? So you can see right here, this was what happened, and it comes back into the box where I had originally planned, back into almost the area I covered the first one. And it turned out to be a great trade. But here's what the thing is. It was a tough trade to begin with. Sometimes you'll hear, oh, the good trades are an easy trade, and sometimes they are, but sometimes they're not. The thing is, you're going to see these signals and take these trades, and sometimes they're not going to, because people go, what about the losers? Well, what about this happens? And I want to kind of just step aside for a second and say something I think is important to all of you. You can't base a strategy's performance off of one or two trades. Sometimes we take a strategy, we trade it like, hey, it works. The next day it doesn't work. You're like, let me move on to something else. You have to stick to the plan and stick to the process. Day trading and scalping is not just about idea. You've heard me say this before. It's about idea execution management. It's about idea and time. Just because the trade does not work doesn't mean the idea is bad. It can be just the timing is off and you need to adjust, right? Markets get very, very dynamic. Each day is a new day. Just because one trade worked doesn't mean the next one's going to work the same way. This is where the real money is made when it comes to trading, is being able to adapt it to conditions and understand how these work and continue to believe and trust in that process. And the only way you're going to do that is through reps. So guys, I'm going to conclude the video here today, and just a quick review of what we're talking about here. What we want to make sure that we do each and every day is look at those candlesticks. When we're studying price action, we're trying to take emotion out of the market first. That's our goal. Emotions first, right? Then we need to see those candles develop. So each and every one of these short trades on Tesla, and even if they were buy trades, they all took place at a specific level. This was resistance. This was a break of resistance and retesting. This was another resistance. I didn't do it in here, right? Even with some of the signals, because it didn't hit those premium levels. Also, you can see that if you have respectable risk management and stop losses, losses don't really matter. That's the thing. You're not afraid to take a loss if you're not going to get yourself smoked. And then you just stick to the plan. So as always, guys, thanks a lot for watching this video. Don't forget that every week my wife and I put out a complete market breakdown watch list. It's called the Gains Guide. It's free. You can go down in the description box, sign up for it. We give the best trades, the best stocks and best assets to trade for the week, along with precision buy and entry points. I want to say thanks a lot for watching this video. It's always my pleasure. I hope you learned something for it. As always, take care, trade well. Cheers.